Welcome back to Market on Close. I'm Caroline Woods. We have about 10 minutes left in the trading day. It's time for the big picture. Let's welcome in Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. Nate, great to have you.
Great to see you, Caroline.
So, Nate, want to get your thoughts on the weakness we're seeing today. We are off the lows of the session, but still firmly in the red. What do you make of it?
Sure. So, I'll just give you my near-term kind of trading perspective. I mean, let's just look at the last 10 trading days here. We had 8 straight up days in the S&P 500 coming into this week. We didn't really have any kind of new deal news, so to speak, on yesterday. And so I think that's likely enough of a reason to get some of this consolidation that we've continued to see. And it just feels to me that the market or the investors and traders, they don't want to be on the sidelines when we get some kind of deal announcement, whether it's a memorandum or it's, with a country that's not even China. China would be great, but I think we all know that's the big one. And because we saw what happened on April 9th, when we were up in such a big, large order that there was a little bit of this pull forward that let me make sure that I'm in the market, because it looks like basically from what's coming from the White House, from Bessent and what he's saying about, de-escalation and improvement, and it's coming, it could be any day, that there's been this upward bias over the past 10 trading days. And so, I understand that there's likely enough of an excuse that if we do get some kind of development there, that does give us enough reason to have some upside in stocks. But it could be very short-lived because we're kind of pulling forward those gains right now. Number one. Number two, we've kind of run back up into our 200-day simple moving averages. If you look at the NASDAQ 100, we basically went right up to the 200-day simple moving average. That's not good from a technical perspective. And then even when we do get those actual trade announcements, it could be this week, it could be next month, we don't know. There's still a lot of uncertainty around how those terms are going to impact the global economy and the economic data. So we haven't seen a lot of the hard data that's manifested that's given us enough of a reason to be pessimistic yet. But I think that there's been some warning signs, be it from corporate earnings guidance and talk about the consumer, or if you look at yesterday's ISM, highest prices paid since January 2023, imagine if we do start to get some hotter inflation prints in the coming weeks. I don't think markets are going to like that very well. So we're kind of fully priced right here, Caroline, and I know that you could be on a very near-term basis. I want to be in the market. But then after we get those potential trade developments, then we might have to digest a little bit and say, oh, wait, we still have a lot to resolve.
Well, that's what I'm thinking. People don't want to be on the sidelines. They want to jump into a market that because we have seen that Liberation Day round trip, essentially, and some would say it's not warranted based on the actual headlines that we've been getting, that deals are actually close. And then to the China point, the latest news from the White House is that President Trump said China wants to negotiate. We will meet at the right time. So it doesn't necessarily seem any closer. So do you think that this could eventually be a buy the rumor, sell the news type of event?
Yeah, certainly. I think it could, but it depends because I think there's probably some expectation that, okay, China is going to be a little bit tougher to kind of bring them to the table. And when we get, the new terms, it's not going to be down at 10%. It's going to be somewhere in between. But there's some variance there in terms of the way the market might receive whatever those tariff levels are, whatever the terms are, et cetera. So there's always some room to exceed or disappoint on expectations, but I would lean a little bit bearish here once we actually get some of that news out. Let the market run when it does this. And again, this is a trader that's talking. Caroline, I know you have a lot of guests on the program. I primarily serve our more active traders. I'm a technician, I'm a CMT. I talk to our option traders. And so my focus is a lot more short term than a lot of your guests. So I want that to be clear when I'm making these types of statements. But just looking at this near term price action, absolutely, you could get some kind of sell on the news. And I think what would really kind of turn or shift this sentiment back lower is if, I'm not saying when per se, but if some of that hard data begins to manifest in terms of inflation, because we're going to hear from Chairman Powell tomorrow, of course. I suspect he's going to be basically patient. He'll, I don't think there's going to be a lot of surprises that's going to be coming out of him. He's still going to be patient. He's still waiting. But the good news is the inflation data, the hard data, has been encouraging. If that starts to turn, then I think that could put us in a little more of a precarious position.
What about if the economic data starts to turn? Because we've seen some pretty upbeat reports, especially last week's jobs report. Could we, if inflation data starts to tick higher, and we know the market would be worried about what that means for interest rates, but does this market want the Fed to cut because the economy is going into a recession? That seems to be the kind of the big question here.
Yeah, and that's why I kind of pointed to the inflation data. It is, the Fed signaled that if the labor market begins to roll over, that was a great non-farm payrolls report. There were a little bit of cracks in JOLTS coming in at a 6-month low, a little bit of crack in last Thursday's initial claims coming in at a 2-month high. We saw the ADP report. I think that was a 4-month low or a 6-month low. I can't remember. So there's slight cracks there, but I think the market would be more comfortable if they begin to see some deterioration in the labor market, because they would translate that as being conducive for the Fed to be more accommodative. However, if the economic data doesn't really roll over, but the inflation data starts to heat up, I think that would kind of dampen some of those hopes that the Fed will be as eager to act as the market wants it to.
Okay. All right. Well, we'll get a little bit better of a sense of where the Fed is tomorrow. Obviously, the market very much pricing in no change, but let's see what they have to say in terms of the outlook for inflation and interest rates. Nate Peterson, Schwab Center for Financial Research. Thanks so much.